In the post-fiscal cliff rally, in the rally in commodities, the rally on the China growth story, the country market that interests me most right now is Australia. That's because before this, Australia was getting beaten up really very, very badly, both on a slowdown in the domestic economy, but mostly about a slowdown in China and rising costs in the mining sector, which is so important in Australia. So as mining goes, pretty much the whole Australian economy and stock market goes. So Australia, I'd say, was fairly depressed before this. I think if you look at companies in commodities in Australia, you'll get more bounce than you would, say, in a Brazil or a United States or a Canada. So if you want a broad-based Australian mining company, one, of course, is BHP Billiton. Symbol is BHP. It trades as an ADR in New York. They're into everything. You get coal, you get uranium, you get iron ore, you get oil, all these things. I mean, it's the great thing about this stock. It's one stock buys you this whole basket of Australian commodities. But on the other hand, you're getting everything. If you can trade in Sydney, and I think you probably can if you call up your discount broker at a Fidelity or a Schwab, the stock that I might suggest you look at is Whitehaven Coal. It's WHC in Sydney, doesn't trade in New York. Owns about 7 coal mines in Australia. Coal has been very, very depressed. The stock is relatively cheap. Has been moving up very, very nicely in the last few weeks. And again, because Australian coal has been so depressed, you're getting a better bounce out of this than you are out of somebody like Peabody in the U.S., BTU, which has big Australian interests, but also a big position in the United States. So if you get a pure play in Australia, because the Australian industry has been down so far, I think you get a better chance for a decent pop on the China story. And as I say, WHC in Sydney, I think, would be a way that I would try to play this. This is Jim Jubak for Jubak Asset Management Video.